Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. It's just education and entertainment. Hopefully you get something out of it. If you do, would love a like, a comment, maybe even a share, maybe a subscription. I want to talk about GameStop's blowing up collectibles sales growth greater than 150% year over year. And I want to show you how we can know how much their sales really are growing and give us a range of whether it's going to continue that and really what we can expect for Q3 and Q4 numbers. Thank you for being here. What's up, Andrew? What's up, Beakers? Let's get into it. I'm going to start by sharing my screen. What's up, Steven? So before I get into it, of course, thank you to the subscribers. 178 spots left in the Y2K sub club. So if you want to be a part of it, you better sub fast. Okay. After that, I'll get to introduce you to the next sub club that you could try to be a part of. But if you're a part of an earlier sub club, then you're also grafted into all of the later sub clubs. So if you want to claim the Y2K, you got 178 subs left. Also, thank you to those that joined the channel as fans and as friends. I finally got this other perk to show up on my channel, the access to firm communication. So if anyone wants to be a part of that, I appreciate it so much. Appreciate the support. Also, new tab on the GameStop master spreadsheet. It's titled BFL Infinity Pool, aka Budget for Life Infinity Pool. What's up, J-Day? What's up, Afghan? Glad y'all are here. So check it out. We've got, obviously this will get updated every month with whatever I get paid from YouTube. I receive that pay in PayPal and then make a purchase on Fidelity. So we got 13 shares at $22.35, some baller cost basis, $11.35 that will just sit there until next month and then can hopefully go towards another share. And we will see when it lands in ComputerShare. I just initiated that transfer today, but it'll be pretty fun to see over time the all-time numbers, right, of how many shares this channel can accumulate and lock up, and then what the gain is on those shares. We're already $14 in the green, which is awesome. Good to see that. So anyways, just a fun tab, mainly for me. Let's talk about this booming sales growth that I'm referring to. What's up, Charlie? Also, we are officially in Power Hour, so that's kind of fun. We'll see if we have a nice little run to close the day. Max Payne's 23 for the day. There's some speculation starting to form about, this kind of mid-November, early November push, and maybe today is kind of the low, or really 2 days ago, maybe the low of this most recent crash. Who knows? But pretty exciting because, again, this 22.49 that we hit on the 21st is higher than 22.10, which is higher than 21.1, which is higher than 20.63, right? So we are continuing to rise even despite the manipulation, even despite the lack of true price discovery. Pretty exciting. CrossFit George asking if I'm following swap theory. I follow it. I'm not. I got burned too many times thinking that those swap models were very predictive, and they didn't help me as much as I wanted them to. So I follow along from a place of interest, but I'm not putting 80% of my portfolio in the timing out the potential spikes. That said, let's get into it. So I want to talk a little bit more about Cohen's statement that he said just about a third of total sales for 2025 are going to come from collectibles. And the reality is, we know a lot about that. Also, I had talked about, he also said that collectibles came from nearly 10%. And I was looking for how close did it get to 10% really? I just settled on this 13% number from Q4 of 2023. But I kept looking back and I was like, wait a minute. When Cohen took over, it was at 11.4% for the full year in 2020, and even as low as 10.6% in Q4 of 2020. So why does that matter as it relates to this? Well, Cohen said that collectibles came from nearly 10% of sales. And I said, great, let's call that 13%. In reality, let's call it 11%, right? 11% is nearly 10%. What does that mean as it relates to projecting the collectible sales for the full year 2025? Well, he says it's going to be just about a third. So before I thought, that's probably 30%. Now I think it really might be more like 32% if we say that those just about and nearly are equivalently synonymous. Then I would say it's probably going to be at least 31, probably closer to 32 or maybe even 32 point something percent of total sales. And then we want to talk about how do we know what hardware and software is going to be? So I actually brought my numbers down, $30 million on software and $10 million on hardware. Because obviously, if you imagine that hardware and software was going to sell nothing, if it was plummeting, then 30% collectible sales is really not that impressive because that's all your sales that you have left. But we know that's not happening. We know software is probably year over year still declining. So this 205 represents a 24.59% decline year over year in software sales. And that's despite Pokemon Z to A coming out during Q3. So pretty conservative. And obviously the Switch 2 just came out. So then you extrapolate basically similar type numbers for Q4. And you have with pretty high clarity, 3.3 billion coming from hardware and software. So could that be 3.2 billion? Yes, it can't really be lower than that. But let's say worst case, we're now talking about 3.2. Then if this is $100 million overestimated, then you would essentially want to take, and then what if also this collectibles percentage is like the lowest percentage acceptable to qualify with Cohen's statement? So right now I'm trying to give you, if you were wanting to interpret GameStop's numbers, Ryan Cohen's statement as bearishly as possible, what's the worst case for what we're looking at in 2025? I'd say if this projection, let's even say it's $150 million too aggressive, it's really impossible for this to be lower than 150 million less than this. I don't know if that makes sense, but I feel very confident that hardware and software will do at least 3.2. It's almost a shoe-in. And then if we want to say, what's the lowest acceptable range? Let's say 30.5% would be the lowest acceptable number for Cohen's statement to make sense. Let's say if this is 28%, I would say just about a third is not really the most accurate representation. Let's say 30.5% is the lowest percentage, the lowest weight of collectibles that would make sense for Ryan Cohen to say on October 20th that it's going to be just about a third. What does that mean? Let's keep bringing this down however far it needs to go. Okay, a little higher than that. And then if we were to distribute that in a way that makes a little bit more sense, we've got, there you go. Worst case total year numbers for 2025 on a net sales basis, 4.6 billion, and 1.4 billion of that being collectibles. That's really the lowest projection you could possibly come up with. We have actually a very high level of clarity now, thanks to this interview from Ryan Cohen. And what do those numbers equate to? Well, those worst case numbers would mean that collectibles are growing in Q3 105% year over year, and in Q4 122% year over year. That would mean that sales per store also growing. So total sales per store also growing beyond 100% year over year. Worst case. So what are the headlines going to be after Q3 or Q4 numbers come out and this is exploding? Well, it's possible that GameStop by then has finally broken out of this crazy price suppression that we're accustomed to at this point. But if you wanted to take the most bearish stance possible on this booming collectibles growth, two things you're going to see. One is you're going to see only the total raw sales number growth reported, which would be what? From 4.6 minus 3.8. So basically a $800 million growth in sales number divided by the 3.8. So you're going to see people reporting their sales growth as a 21% growth rate, which is true, worst case, in a pure dollar perspective. And they're going to ignore the fact that, hey, the growth story is not in hardware and software. Hardware and software, just call them flat if you want. They don't really matter. The real growth is, hello, collectibles growing 100%. Sales per store growing over 100%. So you're going to see mainstream media ignore the fact that they are growing total sales 21% in spite of the fact that software is declining and hardware is modest. They're not going to talk about how, hey, 30% of the business is growing at 120% year over year. You're just going to see that number, describe it as 21%, and ignore the fact that they did this with even fewer stores than before, and that their most important line is growing 5 times faster than that. The other kind of bear interpretation is, well, okay, so they're booming, growing right now, but how long can they keep growing? Right? How many more quarters can they do that? And I'm going to get into that in a future video, but I've been crunching some numbers just to give you all a sneak peek on the collectibles market, alternatives market, traditional market, and all that to say, we hear so much about the booming collectibles cards as if it's a bubble, right? You see this 4,000% growth in Pokemon card sales. Well, guess what? The total card industry right now, with its booming growth, with its bubble growth, is $15.8 billion. If you were to take that as a weight of the entire kind of market, you take all the value of fiat in the stock market, the bond market, derivatives market, other alternatives, collectibles, it's not even on the map. It's 0% of the total pie, okay? And if you were to take cards, even just as a percentage of the total collectibles market. I mean, 16 divided by 554, it's less than 3% right now of the collectibles market. So if you want to have the bear argument of how can this continue? Well, it's not exactly saturated. It's actually just starting. And the trend in the entire collectibles industry is moving towards more affordable ways to get involved in collectibles. And you see that in every single traditional collectibles industry. And guess what's more affordable than all of those industries? Cards and comic books. PSA graded cards, PSA graded comic books, aka PSA partnership, GameStop, GG, game over. But let's focus on collectible sales. This is the worst case scenario. Like, get used to these numbers. Okay. Now, what's the high end scenario for 2025? Well, instead of me being, these estimates being $150 million overshot, what's kind of the high end surprise scenario? Realistically, hardware and software together could do about $200 million more than what I've projected right here. Technically, they could do a little bit more than that. And then realistically, what's the largest percentage that would make sense for Cohen to say just about a third? Now, if you want to get really bullish, you could say, what if it's actually going to be 34%, right? What if Cohen, he's playing chess when other people are playing checkers, and he said it's going to be just about a third, knowing that people would assume that it's going to be less than a third by a percent or two, when in fact it's actually more than a third by a percent or two. I mean, if you're talking about collectibles being 34% of the total pie, what do you have to do to this to get it up there? I mean, holy smokes. You're talking about a $5.5 billion revenue for a company that has 1,000 fewer stores than it did a year ago when it did 3.8. That might be a little bit hyper bullish. So let's get to more so that 32.5 as kind of the realistic high end of what could Cohen mean by just about a third. And that puts us at what? 5.3 billion on the high end side for full year numbers. What does that mean for collectibles? Again, probably to distribute this a little bit more evenly, you're probably looking at 550 in Q3, 750 in Q4 to get you that just about a third high-end projection. And all of a sudden, collectibles is $1.7 billion that's growing how fast now? 142 and then 229% year over year. 229%. Right? If you're hearing this, why don't you drop a 229 in the chat, Like, holy smokes. Just crazy. And then the change in sales per store, again, at 150%. Crazy booming growth that's basically locked in for this year. Again, could this number be more like 4.8 billion? Sure. But no matter what way you slice the communication that Cohen just gave, it means that PowerPacks is doing crazy bonkers numbers. Because if you go back on my channel, you can look at videos where I estimated the hardware, software, collectibles businesses. The collectibles business, my projection for Q3 was 271. And on my high end kind of guesstimate would have been about 300 before thinking about power packs. So that means that if we want to get this to a little bit more balanced, back kind of where I had it, oops. We're talking about 500 and then 650 for a 31.9. Oh, I think I put this at 475 just to be a little bit more conservative. I mean, you're right on the cusp for $5 billion. But if I thought without power packs, the better case, like just with PSA grading, right, in their own store buying and selling of cards, I thought 300 is maybe the high end. Cohen's telling you that power packs is already doing $175 million a quarter. And this is the very, very beginning. This is still in beta. This is just football and Pokemon. They don't have everything else, right? Power packs, if they're doing 175 in their very first quarter and they're still in beta, it's not publicly available, and there's so many other cards, lines that you can't even buy it with, right? Then basically power packs is already doing $1 billion a year in its own right and growing at 1 to 229% year over year. Ridiculous. I mean, just so exciting. These numbers, this type of growth rate, when you're thinking about GameStop's collectibles business and how far could it go? Again, it's just a drop in the bucket compared to the collectibles industry at large. How much of a market share of the collectibles industry could GameStop end up commanding? Who knows? And it's just a drop in the bucket compared to the total industry of alternatives, right? So there's the whatever portion of the cards plus comic books market that GameStop's going to get to command. And then how much is that market going to continue to grow? It's pretty incredible to think about. And then what does this do from a valuation perspective for the collectibles business? I probably should save it for a future video, but eyeballing it, it's like $1 billion of annual revenue. That is in the past. We know we're going to be at 1.5 billion already. And 1.5 billion is only based on 2 quarters of power packs, right? So 1.5 billion is way too low of a number, even in a bear case, even in a floor case, because Q1 and Q2 didn't have power packs, right? So if you were to take this 475 and this 650, well, together that's 1.1 billion in 6 months. So what are they doing on a per 12-month basis? I mean, it's got to be like at least 2 billion, right? Particularly when you think about, normally Q1 is going to be a lower percentage, right? But particularly when you think about this is still in beta, and obviously, again, there's so many types of cards that are not even available yet. Base case, the collectibles business is already, I mean, really not base case, like worst case, this business is twice as much revenue as we thought in a worst case before. Pretty amazing. Margins will actually probably come down because now we know that they're not just taking the high margin fee for power packs, but they are actually the ones buying cards at 90% value. So in the power packs business, they might be making 15% margins on that portion and then 40% margins on kind of the legacy portion of their collectibles business in kind of a worst case scenario. And from a PE perspective, I think this, even a worst case PE, 35 is probably too low. I'm going to end up modeling it out, but it all comes down to, what do you think the growth is? How many years will it grow at 50% plus? And then what does it end up settling down at? And the way that the valuation for fiat currency is going, like the way that global money printing is going, it's hard to imagine the collectibles industry lagging when the demand for alternative stores of value is increasing. Inflation intrinsically increases demand for alternative stores of value, right? Not just from a fiat currency perspective, but also from the stock market perspective, right? How many fewer people might want to have a substantial portion of their investments? It's not even about substantial, but it's just, hey, would some people want to take 10% of what they would have had in cash and put it in alternative stores of value? Yes. Would people want to take 2% of what they would have invested in equities and put it into alternatives? Yes. Like the trend. And if you don't think that's going to happen, you really have to make a case for global fiat currency. Like, how are nationalized institutions that own the money printer, how are they going to reverse the trend of inflation and distrust in money printing that we've seen play out for decades now? It's kind of a crazy argument if you think that the future of the collectibles industry is somehow like intrinsically limited or inherently a bubble. Again, if you want to say something's a bubble, it's like, well, maybe fiat currency at $150 trillion of value, maybe that's a bubble, right? People want to talk about crypto being a bubble. Crypto's 3.6 billion, or sorry, 3.6 trillion. You know, fiat currency is 150 trillion. You know, so which one is the bubble, right? Are collectibles the bubble at 15.8 billion, or are derivatives the market at over a quadrillion in value? So again, intrinsically, what type of PE do you give in even a worst case scenario? Even if collectibles don't grow super fast for super long, even if they cool off at a 15% growth, well, that 15% growth on the long tail is only after however many years you would assign of 30, 40, 50% growth. Even in the worst case scenario, the next couple years of this collectibles business are going to be huge growth numbers year over year. Like, there's no, of course you could talk about like, well, what if a meteor comes and like swoops over all the PSA Vault locations, and the insurance companies that PSA Vault has insurance deals with all go bankrupt, and you could talk about that scenario if you want to, but as far as how you value a business, it's like, okay, well, that scenario is 0.0001%. So like, it's not going to have a huge effect on how do you value the business on a weighted average basis, talking about the different probabilities, right? So you want to have a reasonable worst case scenario. The reasonable worst case scenario is 2 billion annual revenue, weighted average margins between the kind of legacy collectibles and power packs, and we'll see what that comes up to. And then a growth of 30, 40, 50% for some period of years, and then settling out at a 15 to 19% after that. And what type of PE would you give a company like that? Well, it's really not that complicated, but I will finish this math in a video soon. But where was I doing this? Was it in here? Yeah. This morning I was just like kind of bored. And I was like, well, how do we value this? Right? And the S&P 500, it's a PE of 31. And the earnings growth on average is 11%. So what is the break-even point for the S&P 500? Basically, 13 and a half years. 13 and a half years is your break-even point on the current valuation for the S&P 500. And if you're, so let's just say on average that people want to break even by 13 and a half years. Let's just say on average that's the demand. Well, then what we're going to get to do is model out, well, okay, how many years do you have 40% earnings growth? And then how many years after that do you have a 15% earnings growth, or however you want to slope it? And then what is the total like multiple of earnings that you are going to generate in actual cash, right? Like what are you actually going to do in income over the next 13 and a half years? And basically that's what I'm going to pay in a multiple, right? Whatever multiple allows me to break even on my investment in 13 and a half years, like for like, that would be fair. All that to say, what type of PE, if this is over your head, I'm sorry, slow it down. I'm about to explain it another way that might help. If your PE, basically all it means is, why would a company have a PE of 55? It's like, well, if the earnings growth is 25%, then how many years is it going to take you to have earned through your investment for the cash your company earns to be 55 times of the cash it was earning in the first year of your investment? Again, I'm going to save it for a future video. But again, basically worst case scenario is double what we thought it was and less likely than what we thought it was. I had described this a 25% weight before, and now we know that PowerPacks actually is crushing. Like, how many times did Ryan Cohen say, as many cards as we can get, we're going to sell them? So we know that the ceiling is really just a bottleneck of how many cards can GameStop get. But we also know that cards are getting graded at a huge rate, and that GameStop is the front lines for newly graded cards. They're the cheapest way to get cards graded. The cheapest way to get cards graded. So does that mean that the growth is infinite? No, but is GameStop's growth rate relative to any other graded card seller in the industry? Is GameStop going to command a larger and larger portion of that market? Well, yeah, just like by necessity. Again, and if you don't think that, you would have to argue, why is PSA going to lose its dominance as a card grader? If people place a premium value on a PSA graded card compared to other graded card companies, then GameStop will have the best sourcing relative to any other company. So again, GameStop doesn't exist in a vacuum. So even if they can't get infinite graded cards, if they can outperform the industry and as a result gain a larger portion of the industry, then even if the industry is only growing at the pace of however many new cards are getting graded, which honestly is greater than 100% year over year numbers, if that's how fast the industry is growing, but GameStop's position in the industry is growing even faster, again, Just crazy numbers when you start to put it all together. Pretty exciting stuff. Whoo! What do y'all think? Any other thoughts? Any questions? Anyone have YOLO calls that expire in 25 minutes at a 40 strike? I don't. I do have a plenty for November 21st. I've got some in the book for that, so excited about that. What's up, Ole? Made it to a Budget Life stream for the first time. World Informers got some 30 strikes for January 16. I don't think you're cooked. Afro made some money on cover calls. Way to go, dude. Ole from Germany. What's up, man? What's up? A great national football team y'all got over there. You know, the global footballers, not American football. What's up, Johnny? Glad you're here. CrossFit George, thanks for the comments, man. Also, love to see you in the spreadsheet. It's great stuff. Yesterday in gaming, interesting. I'm waiting for GameStop to allow you to exchange PSA graded cards for store credit to be put towards inventory like new consoles and things like that. I think you can do that. I'm pretty sure you can do that. You can go into GameStop, trade in graded cards, get store credit, and then walk out with new consoles. GameStop tweeted as much the other day. I mean, it was actually a while back now. But let me know if I was misinterpreting what you were saying. Yeah, Andrew and CrossFit say that you can also do that. Oh, yeah, they just made another tweet. Oh, sweet. Traded in some graded cards for a Switch 2 for store credit. Way to go. There's a couple other scenarios of this happening. So, anyways, that's one of the competitive advantages. I want to make another video soon about GameStop's partnership with PSA. And basically, so again, if you want to have a bear case on the valuation for GameStop's collectibles business, one argument you could have is, well, what if the collectibles business is a bubble? And what I was getting at is, you haven't seen anything yet. If you think this is a bubble, you haven't seen anything yet. Like, we're not even close to bubble. And the demand for affordable stores of value is growing. It's growing in every industry. Jewelry. What's growing fast? Online jewelry sales. What's growing fast in luxury watches? Pre-owned watches. What's growing fast in art? Low-end art. High-end art is declining. What's growing fast in rare wine? Subscription models, right? Boxes, like lower priced subscriptions that give you some lower end with some higher end to make it more affordable. What's growing the fastest with rare whiskey? Bottles that are under $1,000. Affordable stores of value are growing. And think about the actual storing. Okay, if you buy rare wine, if you buy rare whiskey, you know what you have to have? A wine cellar. Like, you got to have a full-blown bar, right? If you want to own luxury watches, you got to buy insurance with that, right? Same with jewelry. If you want to have fine art, like, these are super they're high risk in a sense that there's a higher risk to them being stolen. There's a higher risk to them being damaged in some way. With PSA graded cards, they are so small. and they're inside of the case, right? The card itself can't be damaged compared to fine art. If you want to hang up a sculpture in your house or a piece of art in your wall, it's like, well, man, I hope no one touches it, right? And not only that, you don't have to store them yourself. You can store them in the PSA vault, and PSA insures its own vault, so you don't have to pay for the insurance either. So as far as a store of value, you're talking about something that's this big compared to an entire bottle of wine or a bottle of whiskey or who knows how large of a piece of art that you don't even have to store yourself if you don't want to. You don't have to insure yourself. You know what I mean? So again, if you want to have a bear case on what's the worst outcome, what's the worst valuation for the collectibles business, you could argue graded cards are a bubble. I would argue that that's pretty short-sighted, pretty irrational. Again, hypothetically, could something just flip? Could something invert? Could no one value collectibles anymore? Sure, but what type of odds would you give that? It's like a 0.0 something percent chance. You can make the same, and if you want to go there, then it's like, okay, well, what's the intrinsic value of fiat currency? Like, it's just a trust-based exchange of value. It's a bartering system. What's the intrinsic value of gold, of silver, of crypto, of derivatives, right? It's a trust-based store of value. So could something flip to where, oh, these are worthless now? Yeah, sure. But also the whole world could be on fire. What are we even talking about? you know? So I don't think it's a very rational bear case. Another bear case that I was getting at a minute ago is, well, what if PSA's dominance in the market somehow declines? And so then GameStop's competitive advantage is not quite as strong. And again, what odds would you give that? It's like saying, well, what if Picasso's artwork becomes like less popular or something? Or like, I don't know, it's a stupid analogy, but like, what's the catalyst that would cause that to happen? Anyone can say, what if? Well, what if, right? It's like, okay, but how would that happen? Can you even imagine a scenario where PSA is not the premium and the primary and the preferred grading service? And even if you could, maybe you can't see them falling off a cliff. Maybe you could see them saying, well, they're only 60% of the market share. Again, why would that happen? Are other card grading services doing it cheaper? Right? Is that the case? How much does it cost to get a card graded by CGC? Okay. So maybe slightly cheaper other places. So can other places cost cut to get more of the market share? Okay, fine. But how does that like eliminate GameStop's ability to partner with other grading services if they really wanted to, So it's not like intrinsically threatening as far as a worst case scenario. What's up, Fred C? First time in the chat. Hey, thanks so much. He says, love the coverage you're providing. GameStop's future outlook hasn't ever been this good. It's true. Never, ever in their company's history has it been even close to this good. You got to love that. Patrick says, in my opinion, every PSA 10 is a keep. Yeah, statistically, and GM Intel, I don't know how you would say that, says that they do it better. They do grading better, and their graded cards currently trade as a substantial premium value compared to other grading services, to the point where people will actually like decase cards that have been graded by other grading companies to submit them to PSA to be graded. Then you also think about PSA's entrenchment with eBay. Like eBay, they say the PSA vault is becoming the eBay vault. right now, eBay is by far the largest marketplace for graded cards to sell. So again, what would happen to threaten PSA's dominance? It's not really a very viable scenario. It's hard to imagine a scenario where PSA is not still the premium grader. So then it's like, well, what if GameStop doesn't, like, what if their partnership with PSA somehow disintegrates? Right? That would be one of the most discouraging, one of the most threatening things that could happen to their collectibles business. And it's like, well, again, why would that happen? What are the odds that that happens? Is PSA incentivized for that to happen? And the answer is no, they aren't. What does PSA do? They grade and they store, right? They are the premium grading service that's growing at 100%. Like, they have enough growth to deal with already. And they have their vault service, right? What's up, Radon? Greetings from Croatia, man. I love it. I don't have any particular recommendations as far as learning how to interpret financial statements. Stay around to the channel. Stay around to the channel. We're going to be breaking down their 10Ks like crazy over here. I know y'all think I'm probably running out of stuff. I've got more stuff to talk about now than before I started making these videos. Trust me. But no, I don't have a. I wish I did. I don't have a particular good recommendation for you. PSA does not have retail fronts. They don't have stores. So why would they disintegrate their partnership with GameStop? It's like they wouldn't unless they were about to start 400 stores. And if PSA grading is growing at 40, 50, 60, 100% year over year, like graded submissions, trust me, the last thing they want to do is try to open 500 plus store locations, you know? Secondly, they want as many people submitting cards for grading as possible. That's their bread and butter. That's where they make their money, right? Is the graded cards. And GameStop is facilitating that for them with a storefront, attracting new people into the hobby that weren't grading before. The only people that were grading before were the same people showing up to card shows, right? Like that were like semi-pro card collectible hobbyists, enthusiasts, right? And so PSA has those people as their own members, but PSA needs to get, like, what's the hardest thing for power packs to source? It is the low end graded cards. We saw this happen. I don't know if it could be on here, where for a day or so they were out of the $25 Pokemon cards. Like, they were like sold out. We don't have any more. The low end cards almost have like the highest demand, and for that to sustain, PSA needs as many cards as possible to be submitted for grading, like big time. And so if GameStop is doing a ton of volume, getting a ton of cards graded, why in the world, again, for a reasonable person, why in the world would PSA be interested in discontinuing that partnership? Right? And then you have power packs, which for PSA is free money, right? GameStop built it and GameStop's facilitating it. And again, if someone doesn't do the instant offer, well, guess what? PSA's vault is storing all those cards. So GameStop is paying PSA to use their vault. GameStop's storing these cards in the PSA vault. What does PSA want to do? They want to make as much money as they can through the businesses that they've already created, grading and vault. GameStop is sending tons of cards to the vault through this Power Packs business, right? PSA is getting vault money, you know, and they're also getting some commissions if people decide to keep it and then later sell it through the PSA vault on eBay. Well, then PSA is getting that money. So PSA is getting some seller fees through eBay sales that happen through Power Packs, and PSA is getting vault fees. And they don't have to do anything new. They get to keep doing what they're already doing. And then what else is PSA getting? They're getting a ton of new cards graded. So not only do they make the money on the grading, but they also get that many more cards in the graded card ecosystem that, again, boost the overall market, get more and more people into the collectible space, make it that much more accessible. So why in the world would PSA be interested in discontinuing that relationship? They're just not. They're just not. So there's really no bear case that makes sense other than just hypothetical what ifs. And the only what if that makes sense is like, well, what if it grows? Eventually, it's only growing at 15%. Like, what if it cools? Okay, that's it. That's it. Like there's, for what the business is right now, there's basically no downside and there's substantial upside. And that's exactly what Ryan Cohen was talking about when he was talking about how to allocate cash. He said it needs to be a situation where downside is limited, upside is really high. And that's what GameStop has found themselves in right here with the collectibles business. Super, super low downside and a very high upside. I'm excited to model this fully in a valuation model. But before this update from Cohen, the collectibles business by itself, in my estimation, weighted average was worth $17 billion. It's going to be a higher number. It's going to be a higher number because these numbers are going to be higher numbers. And the probability of this lowest case is going to be lower. And the probability of these cases is going to be higher. So it's just pretty exciting times to be invested. Again, try not to get lost in the stock, okay, aka lost in the sauce. Try to focus on what's the company actually doing. And ultimately, this money that they're making, they're going to make money with that money. The sales isn't just, oh, cool, sales growth. I hope that someone finally gives GameStop a fair multiple. It's not, of course, we want GameStop to get a fair multiple. Like, we want the fundamental repricing, the price discovery. We want that to happen. But the worst case scenario is, well, they still made that money, Like, there's only right now $447 million in the float. Or sorry, 447 million shares in the float. So if you're saying that a week ago, we thought this number was going to be 4.5 billion, and now we're realizing it's going to be 5 billion. Well, that $500 million, what's the profit margin on that extra 500 million, right? Is it 100 million of profit? Well, 100 million divided by 447 million shares, well, that's 25 cents a share. Boom, of cash right there, right now, that is already pushing up on the floor of what GameStop's trading at. They literally really are trading close to cash right now at 10.47. And when you think about not only their rising cash floor, but also the pace of this sales growth, it's hard to imagine how much longer it would be before the stock really does begin trading at a fair multiple. And what would a fair multiple be for booming growth with tons of market cap still ahead of it? Whoo! Needless to say, it's high. It's high. I've probably got to wrap this one up, guys. Let me catch up on a couple comments, and I appreciate y'all being here. 62 of you guys here. Man, thank you so much. Coming up on market close right now. I don't even care where it closes right now because I'm so stinking pumped about the stock, but whatever. I'm pumped about the company, right? GameStop and PSA is going to become a blockchain-based marketplace. Yeah, very possible. just added levels of trust. Yesterday, Gaming says GameStop could create their own market for PSA graded items. Have the UI focus on completing collections rather than a random display of items. Those are kind of like two different comments. That's a cool thought as far as the UI. But their own market, I mean, that's basically what they have on their website, I think. You know, like you can buy graded cards from GameStop.com, you know. Oh, geez. I look at their filing so much that the auto, when I start typing in GameStop, they send me to the SEC investor relations page. But I mean, this is GameStop's PSA graded card marketplace. So maybe I'm not understanding what you're saying, but to think about it being displayed by collection is pretty cool. Let's see. J-Day said, I just started following the stock of high-end graded Pokemon cards, and they still sell so fast. It's true. It's so true. Oh, like a PSA, like from the vault marketplace. That's probably what you were talking about. Like, can you from the Power Packs vault sell peer-to-peer, or can you sell, even trade peer-to-peer? I think that's totally in the cards. That's totally possible. And Power Packs is already better than any other of these. Like, it's better than the Arena Club. It's better than the Courtyard.io. Like, this is the best product already. So if they make it even better, that's just gravy. But I don't think they even have to, because like Ryan Cohen said, they're already selling everything they can. But yeah, the opportunity to improve it is great. I don't know if they will, though, because maybe PSA is like, hey, we'll do this partnership, but only if we stick it to like eBay as the end deal. Okay, my wife just said that I'm overdue. GME Power Rangers opened over 600 power packs. Way to go, dude. Yeah, the app turning into a marketplace. Super excited. Jarrett Chang, what's up, man? Fred C, love it. DeSwag, what's up, dude? Yeah, super excited to see what GameStop develops. But the most important part of this video is what they've already developed is growing at crazy, crazy bonkers numbers, 150% plus year over year, targeting $5 billion in sales growth despite a shrinking storefront. You got to love it. All right, I got to get going. So I'll talk more about this stock in the next one. Thank you guys for being here. Let me figure out, how do I close this? Oh, there we go. In the stream. Later, y'all.